finance management during COVID times. We welcome our principal ma'am, our speaker of the day, Mr. Anand, other faculty members of our college, and all our alumni friends. Mr. Anand belongs to the 2001-2005 batch EEE branch. He is a lead product consultant, CTS USA. He has 15 plus years of experience in IT industry, with primary focus on business analysis, consulting, project and delivery management. He has managed large clients in US in the asset and wealth management domain. He has significant experience in leading the requirement management, business analysis, and design phase for implementation in the areas such as reference data management, investment accounting, data warehousing, and IBOR. He is an ardent capital market and alternate asset investor aspiring to start own investment advisory business. We welcome you, sir. So you can start.
Thomas, thanks. Thanks for that introduction. Good evening, good morning, everyone. So let me get into the agenda. So the topic for today's discussion is financial management during COVID times. So the term financial management by itself, it's such a broader term. So it's like an ocean. So what I try to do is like I just try to cover some topics around that. So basically, like I want to just give an overview about the investment basics and what is typically the difference between trading and an investing, and like how the global indices, the global stock markets are behaving during the COVID, and how we could see it as an opportunity. And then from my perspective, like what are the best themes to be invested like during COVID and post-COVID. And this is purely my perspective about investing in the stock markets. And then like the options trading, typically like if you guys want me to just show the basics of options trading or a snapshot of the portfolio that I have worked in the last 1 or 2 months, I could just show that. And then like I have been into this stock markets or like options trading and quite a bit of other investments for the past 12 or 13 years out of my own interest. And you would have heard that, like Thomas said, like one of my future plan is to start a brokerage or a robo advisory firm. So, and all these 12 years, I had lots of ups and downs. I've started a few small businesses. So I just want to share some of the lessons and some of the broken myths around my experience, and especially with respect to the stock market. And then I want to discuss about the emerging trends, typically like the digital banking and the P2P lending and quite a bit of cryptocurrencies. So that's about the agenda for today's session. So feel free to pass me like if you have any questions. Let's try to give a logical pass for your questions. Okay, so I'm just moving on to a slide. Okay, so I'm going to just put up some data for you guys to just look at it. So, and before that, Thomas, can you please confirm if you are able to see my screen? Everything is good?
Everything is good, loud and clear. Yeah.
Perfect. Okay, so so this is some data about the global stock markets. Okay, so if you look at that, like when the COVID started, like around like the early 2020, so the markets were like kind of like it went for an bottom. So the statistics shows like, okay, typically like the March 2020 is when you had a lot of these indices have gone to their lows. So, and then like now it's kind of recovered like in August 2020. So you could see the percentage change. So if you look at like something like a NASDAQ or Dow Jones or like NSE or BSE, significantly it has kind of like, okay, changed from a 50% increase from the lows. Okay, and I think like with most of the participants, I think from India and US, so I'm going to specifically focus on the US and Indian markets. So what this data reveals to us, okay, so this typically shows that like, okay, it's a very good opportunity, okay, for us to kind of do the investment or trading. And that's where I want to start with the difference between a trader and an investor. So trader, so before we get into the different asset classes, I want to bring this perspective about this trader and investor. So trader is someone who likes volatility. So he likes the uneven swings within the market. So that's when like he would be able to make a profit or loss. So when these kind of volatility occurs, like something like a pandemic, like during a COVID, or like okay, when there are elections or when there are budget announcements every year, so that's when the market will swing. So I would say like okay, that's a perfect platform for a trader to do okay any kind of okay trading, okay intraday trading or an options trading. Okay, but what is the difference between a trader and investor? So investor is one who works based on a long-term objective. So he should first, okay, solidify his goals. Like what are his long-term goals? What would be his 20 to 25 years or 15 years? What would be his long-term goals? And people typically ask like, okay, what is the right time to start an investment? So if you ask me, there is no start date for an investor because you can't like, okay, predict the exact timing of the market when it will get into low. But if you are, okay, an investor in a 15 or a 20-year cycle, so typically, like there is no specific time or a good day to start your investment. You could early start, it's better. So I just want to bring that perspective of a difference between a trader and investor. So trader is one who kind of like okay, he has an okay entry and exit strategy. Like let's say like you have a, like a 3% gain or a 5% gain on a day, or let's say like you have a 3% or a 5% okay increase in your options. Okay, so you would basically like do an exit. So it's purely based on profit and loss. But whereas an investor is one who like okay exits when he meets his financial objectives. So that's the difference between a trader and investor. With this perspective, like I also want to discuss, okay, about the reasons for the recovery of the stock markets. So one of the main reasons I think like okay, why this market has recovered. So if you look at this, almost like some of the markets have they have recovered like 50%, more than 50%. So the lesson that I have learned is markets are always okay trading at a premium. Like we always expect a better future. When the COVID started, there were a lot of unknowns. We were not sure. Like, but at least to some extent now we all are used to it. So kind of like okay, this is how it's going to behave. Like the next 1.5 years is going to be a challenge. Everything has to be done virtually. So, but now we are okay, kind of like know the future. Like maybe like it's going to take another one year to have a vaccine or something like that. So the markets, when I say like it's trading at premium, it is anticipating something good is going to happen in the future, and that's why it has kind of like started recovering. And that's not what the situation when the markets were okay in March or like around Feb. And there is plenty of liquidity. So when I say plenty of liquidity, there are a lot of cash that is being pumped into the economy. So basically, like you see, like okay, there are a lot of stimulus. You see, like big governments pumping money into the economy. The interest rates are very low. Okay, so simple example, the housing market in US, I would say like okay, people were expecting it to kind of like okay crack down, but it's still like okay, it's maintaining that momentum. So because the interest rates are low, so there is plenty of liquidity, and I would say like okay, so I don't think anything changed for 80 to 90% of the players in the stock market because all those big institutions, mutual fund companies, okay, all those market participants are still investing and they have a plenty of liquidity. So there are companies which have gone bankrupt. Okay, there are smaller companies or some businesses that have gone bankrupt, but those are businesses. But in terms of investing and trading, okay, I would say like this is the best time. So 80 to 90 percentage, I don't think like anything changed, at least with respect to the financial markets. That's my understanding. So I'm just moving on to okay the basic slide okay about investing. So as I explained, there is a lot of difference between the investment and trading. So as I said, like as an investor perspective, there is no start date. You could just like okay start when the markets are low. Even now, like okay, people ask this question. The markets, at least the U.S. markets, are at a lifetime high. Is this a right time to invest? Yes, this is a right time to invest if you're looking for a 15 to 20 years okay of horizon, and that's where like okay the way you should start focusing on your investments is first solidify your goals. When I say solidify your goals, what is your objective? What is the financial objective that you want to meet as an investor? So maybe like 15 years down the line, I would like to have like 10 crore, as my retirement, amount, or let's say like I would like to have a 1 million, so, or let's say like, 15, 20 years in the down the line, I want to invest for my, like, I need like so much of money for my children's education, or maybe like, my children's marriage or something like that. Like, so you should have some financial objectives. So on, those are the things like, that will decide, the kind of portfolio you need to build. So first you need to solidify the goals. And personally, like, as I said, like I've gone through this 12 to 13 years of experience in the stock market. Like I initially started like kind of like, purely on a profit basis. Like I invest in some stocks and I exit. And quite reasonably, I was making some good money, but the fact that I realized is, so you have to just work based on your goals. So that's the first thing. Like as an investor, I'm sure that like, the participants, a lot of you are new to the stock markets. So if you have kind of like that anxiety, or like if you want to get started with the markets, there is no better time. So you could just always start anytime, but make sure that you solidify your goals, and then you know what is needed. When I say what is needed, you have to determine your financial objectives and your time horizon and your risk appetite and like investment frequency, how much I'm going to invest once in every month or like once in every year. And then you weigh the alternatives, and that's where we are going to come to the different asset classes that we have, and then pick a path. So this is purely from an investment perspective. Whereas trading, as I said, like, trading is something like, which is purely based on the volatility of a market or a stability of a market. So let's say like the market is not moving at all. Let's say like the indices are moving like a 50 or 100 points, or maybe like it's not moving, it's trading flat. It's not the perfect situation for trading. But something like an COVID, I've seen like there was one day like, where there was like, I believe like the Nifty, it swung from like 1,000 points up, 1,000 points down. I don't know the exact date, but that's the kind of volatility, if you are a trader, you would expect. And as a trader, again, like you should have a proper entry and exit strategy. When I say entry strategy, you should probably look for the days where you will have more volatility. I would say like some of the best days that I had as a trader in the stock market is when then there was like a significant news, like for example Brexit. Brexit, budget, something like an elections outcome in India, something like a COVID, some significant policy changes. Those are the good days for trading. So that's what I say as an entry strategy. But an exit strategy, and again, like, so we always like to have more profits, but you should define like, what is the exit point? Let's say like I'm 3% down on an intraday trading, or let's say like I'm a 3% up on an intraday trading. You should be very clear with your exit strategy. So typically like, so I had times where I kind of like, exit with the 3% profit, and then like I realized that it moves 10-15%. So as a trader, the entry and exit points are different. Entry and exit points are important, and then you should look for like volatility. And when I say stability, why is it required for the trading? Let's say like you are doing kind of like an options selling or something like that, right? So you want your premium to dissolve. So that's when like you would typically do an options trading. When the markets are stable and it's flat, right, your options premium would dissolve, and that's when you would sell options. So we'll come to that, and I'm going to like, kind of like give an overview about different investment avenues. So what I have put up in the screen is the different asset classes, at least like some of them that I know. And for these asset classes, I determine, right, if I could play as an investor or a trader. So let me start with equity. So equity is something like I would like to play as an investor and a trader. Like, let's say I have a long-term financial objective, so I would just play myself as an investor. Okay, so unlike there are cases where I would like to do an intraday trading, or let's say like I would like to do an options trading. That's when you do a trading in equity. And when it comes to bonds, mutuals, mutual funds, and exchange traded funds, you have to be typically an investor. And derivatives, and again, like, okay, you have to be a trader. And insurance, and again, like, you have to be an investor. This is something like I want to just uh, uh, um, throw some points about insurance. I'm sure that we all have our life insurance, and typically like the automobile insurance and stuff. But one thing I specifically recommend to any individual, if you are in your mid 30s or like maybe in your early 30s, okay, the one insurance that you should definitely have is a term insurance. So the term insurance in the sense, and again, like now there are a lot of schemes, okay, there used to be days like we have to pay, okay, forever for this term insurance. Now there are multiple schemes where you could just get a term insurance for, let's say, like 5 years. Okay, so I think a couple of years back, I enrolled for a term insurance with ICICI. So typically, like, okay, they cover you up to 85 years. So, but all you have to do is you have to do a payment for 5 years, but the payment would be lump sum. Okay, maybe you have to pay like a 10K or 15K every month, okay, in terms of, okay, the term insurance. So you could just pay for a 5 year, okay, significantly a larger amount every month, or you could just pay throughout your lifetime. Okay, so term insurance is completely like, okay, different. It's a kind of security that you give for your family. So that's something like I would personally recommend. So if you are in your early 30s or mid 30s, okay, so you should definitely like have some form of term insurance. So, and then real estate, I would say, like, again, you have to be an investor. You can't just do a trading in the real estate. So typically, like, that's an asset, like, okay, which is kind of like you need to do the long-term investment. And gold, this is something like, okay, it always raises our eyebrows, kind of like, and especially with the current scenario, they generally say like, okay, gold is definitely a good form of investment. So, and again, like if you're looking for a 10 to 15 years or 15 to 20 years horizon, so gold is one of the investments. And then cryptocurrency. So this is something that we will be discussing in the emerging trends. Okay, so this is something like, okay, kind of like, okay, some kind of like, okay, fanciness is around there. So that's where, right, okay, you should have an investment strategy. So you need not put all your money in the cryptocurrency, but this seems to be like, okay, kind of something that would have probably a good future. And especially with this COVID and stuff, I've seen like, okay, news, okay, where like even the central banks of every country, they are planning to have digital coins. Okay, so cryptocurrency, and again, we'll come to that. Like, okay, you have a generation 1, generation 2, and generation 3 cryptocurrency. So my recommendation is to invest maybe like a 5% or maybe like a 7% of your portfolio in your cryptocurrency. And the next one is education. So education, I think like people ask me with this question. I do not have, okay, kind of a lump sum money to do some investment. Neither I'm not interested in a stock market or a derivatives or something like that. And that's when I say like, okay, education, reading and learning skills, okay, is something that you could invest. The reason why I said like, okay, education is an investment, and I was quoting this example about doing an MBA. So doing an MBA or engineering, right? Okay, is definitely a good investment. Okay, so and reading and learning new skills, I would say like, okay, that's you have to play like a trader. So when I say like reading, so let's say like you learn some new skills. Okay, so definitely that's going to help you. So when I say trading, how you trade it, typically like in a job market, if you want to trade yourself, you have to definitely acquire, okay, some kind of new skills. Okay, so I'm not sure if I'm running too fast. So I'll take a pass here, and I just want to know like if you guys have any specific questions. Okay, so
Crystal clear. Thank you.
okay, thanks. I think it's Naveen, if I'm not wrong. I'm able to recognize the voice. So
Very much, thank you. Yes.
okay, so
Yeah, Anand, this is Surya. So I think Forex is another platform. So cryptocurrency, you talked about that, and we can include the Forex as well, right? The
Sure.
exchange.
Yes, yes. Some of the asset classes I haven't put like Forex and then like maybe commodity. Um, I'm not too deep into that. So yes, you're correct. Like there is Forex and you have this commodity trading kind of stuff. Yes. Um, I'm moving on to the next set of slides. Okay, so ever since like I decided to give up. I mean, kind of like present this session. Like at least like few of our alumni were reaching out to me, like kind of like based on the knowledge that I have, what would be the um, best sector or like best stocks to invest. So this is a slide like from my perspective, like what are the areas that you have to typically like kind of like invest. So I would say like and again now we are, I would say like maybe like we are 30 or 40% or maybe even halfway through the pandemic. Okay, so during the pandemic, these are some of the sectors. Okay, so typically like you have to invest, and these are some of the sectors that have kind of raised to a certain extent, especially like in India, like all the big pharmas, be it like your Cipla, Sun Pharma, Dr. Reddy's. Okay, these are some of the companies that um, have a significant increase in their value. And then with respect to US media and communications, one stock I always love is like Netflix, and I would say like something like a Roku or something like that is a good investment. And technology, and again like technology is kind of like evergreen, and we will come to that. I want to bring some context about one of the favorite quotes of me, like the software is eating the world, or the computers are eating the world. So technology is something like that's an evergreen, and you have to look for those Nikkei technology stocks. And things that I would avoid, at least from an Indian stock market perspective: commercial real estate. Now, the thought around this is typically like, that like at some point of time, even if this COVID ends, right? I think like a lot of sectors, they prefer to work virtually. So I've heard this news like TCS, like maybe by 2025 they are planning to have their 60-70% of the workforce working virtually, maybe like working from home. So these are some of the things that would indirectly impact the commercial real estate space. So all those big infrastructure requirements that might slow down, but so that's again something that I would personally avoid: a commercial real estate investment. And public sector banks. Public sector banks, this is something like we need to I'll be explaining. So there are a lot of public sector banks which are kind of like, they have not been kind of digitized themselves. They have been not into like the recent trends. Still they are working on the traditional model, like the physical presence kind of stuff. So, and that's where you would see like a lot of, even like the market has recovered significant percentage, but I would still see like some public sector banks, like an SBI, something that's still like it's close to that 52-week lows. And energy sector, specifically in US, I would avoid, considering the volatility that we have in the crude prices, or any stocks with respect to the oil and gas. And post pandemic, I was mentioning this, like around 80 to 90 percentage of what we do has not changed, except that like the physical movements, whatever that we do has not changed. But when this pandemic ends, so that's when like all these locked up people, like they will kind of like start doing a lot of travels. And then like I personally believe that the travel and tourism is going to just boom up, especially something like US. A country like US, definitely it's going to just, people even now, like they've started moving in when things started getting better. But this is something like I would specifically like say that like post pandemic, the airlines industry, that's going to pick up. And then miscellaneous. So this is something like that we need to specifically pick some stocks. And one of the stocks that, based on my analysis, that's going to definitely like I believe is going to have a significant upward movement is something in the Indian matchmaking industry with your matrimony.com. So that's definitely like, okay, it's going to like, okay, bump up. So, and then the personal and household industry, that's another thing that's going to like, okay, probably like going to kick off. Okay, once this post pandemic is over. And then we will talk about digital banks. There are not many two stocks in the uh, in the digital banks, but there are banks who are actually like kind of getting into more of a digital banking. Okay, so and then infra and related. So I hope like some of the infra and like okay something related to it, something like a cement sector would start like okay kicking off post pandemic. And again, like the smaller pharmas and the PSUs or the traditional banks is something that I would avoid. And the reason being like smaller farmers. So I'm sure that like a lot of you guys are following some of at least the guys in the US stock market, they are following something like a Moderna or Gillette Life Sciences. Okay, so there are a lot of stocks, okay, which typically like okay, let's say they complete the phase 1 or phase 2 or phase 3 trial, right? These stocks, okay, started moving up. And I'm sure that like if you are an investor in US, people generally like okay when they want to make more money they invest in this small farmers like okay so and they follow up on this. So typically in an US vaccine cycle you have 4 different stages. They call it as phase 1, phase 2, phase 3, phase 4. So and typically like, a lot of the smaller companies their stock movements is depending on like let's say on a particular vaccine or a particular drug. Let's say like they complete like a phase 2 or a phase 2 trial, phase 2 or a phase 3 trial or phase 4 trial, the stock movements would be there. So I would say like okay so you should probably like avoid the smaller pharmas like okay the insignificant names which are purely driving based on the COVID factor. Okay, that is something that I would avoid. So that's my these are my recommendations based on my understanding. Okay, so any questions?
Yeah, Anant, I just wanted to provide my view. See, most of the this market trends are it's a futuristic. So if you look at the pharma, if you look at the technology, it's already capitalized. Even S&P and Nasdaq, it came out from the level where it was in before pandemic. Okay, so I'm not sure is it still it is good to consider the technology and pharma to invest because I see it's already captured all the the futuristic the scenario to look at it. My point of view is wherever the stocks still it is bottomed like the tourism you highlighted and some of the the travel industry it's a completely bottomed out and not recovered from the the March 23 level. I could say it's a 10 to 15% only it came out, and there is a lot of room to go up. So I see so wherever the stocks are the bottomed out. That is the the scenario I would consider. I'm not sure what is your point of view on that.
Yes, Surya. Like there are 2 ways to look at it. Yes, so you're absolutely right. That's why I've just put up the tourism and travel industry. Okay, so it has hit the rock bottom, and when things started picking up, definitely like the airlines industry or the travel and tourism, that's going to kind of like okay start okay kicking up. But and again like okay so that's where I just want to bring this perspective. When I say technology stocks, okay, we need to look for the smart technology stocks. Okay, and that's where I want to put up this slide. Okay, so I just want to bring this context. Okay, so why technology stocks okay is a must in someone's portfolio. So so look at this like okay some of the questions that I have. So the world's fastest growing retailer. So I'm sure that most of you know that it's Amazon. So and can anybody tell me like what is the world's fastest growing recruitment company?
London?
Yes, that's correct. LinkedIn. And then the largest advertising company? it's Google Ads, and then the largest media and streaming company, at least Netflix, and then like the music distribution, it's Apple, and then like the photography company is Instagram. So one thing that is common between, okay, all these companies, okay, so from my perspective, these are, okay, some of the companies who are the early adapters of an emerging technology. Okay, be it an e-commerce or like, okay, kind of a streaming or something like that. So that's where, right, irrespective of whether it's at a 52-week high, so, or irrespective of it has recovered so much from their lows, okay, still there is a possibility that there is some kind of growth that is still left. Okay, and yes, Suri, to answer your question, yes, some of these stocks have, it's almost close to the lifetime high or a 52-week high. Okay, but still, okay, so if you do some smart picks, okay, so you would be able to make another 10-15%. And again, that's where like I brought this perspective about like this investing and trading. Okay, trading is completely a different thing. Okay, maybe you have to think through this. These are like, okay, at 52-week highs, maybe you think that it's not going to increase, okay, a lot in the next 3 to 6 months. Okay, maybe like, okay, if you're doing a short-term investment, maybe these are not the right picks, but in terms of a longer, okay, run, okay, maybe like 15-20 years down the line, you would just have a lot of stock splits. Okay, you would just, okay, maybe like Apple is a typical example. I think they're going to have a stock split. There was a recent announcement. So some of these stocks, okay, so is definitely like, okay, going to grow like, okay, a lot. So exactly, you have to do a kind of a smart pick around that. So that being said, like I'm just moving back to my previous slides. So and again, one thing I just want to make sure is like, okay, I am not sure like what is the expectation around this session for a lot of participants. So, so maybe like the term financial management, like, okay, it's as I said, it's a broader topic. Maybe the expectation was different, but I'm just trying to like, okay, see like if you could just cover a lot of topics around this time. So the derivatives and options trading. So this is something like, okay, I would say like, I just want to take one example of investing and one example of trading. So as I said, right, when the markets are volatile, okay, so you would definitely, okay, love to do options trading and something like, okay, I always have this thought around investing in options. Okay, so at least the guys who are familiar with the call and put, I always think that like every month I have to put some kind of like I have to buy some put contract because that's how you would be able to cover, okay, cover up for some kind of like, okay, huge volatility or uncertainty. So to give you an example, if someone has put some, okay, invested some money or like, let's say they were doing some trading in put options, okay, let's say they have, if they had bought some put options around like March or April, right? Okay, definitely they would have made like enormous amount of money. So that's why I always think like, okay, to some extent, maybe like a 10K or a 5K, okay, in INR, okay, so you have to typically invest, okay, in the options market, okay, anticipating certain things. So when you hear a bad news, okay, I think like something like a COVID, like that's increasing cases and stuff, you have to play with your options. And I'm just going to show you a sample portfolio, like, okay, of what I achieved, okay, in the last, it's kind of a snapshot of my June and July trading. Okay, so that typically shows like, so what I follow is something like a kind of a 15 to 30 minute strategy. And you know that like I'm basically like an investor in US equity, and then I'm a trader in Indian options. So this is a snapshot of whatever that I have done in the Indian trading. So kind of like, okay, so you know that the market opens, it's like kind of 11:30 for me, 11:30 for me, okay, in US. But I decided that the 15 to 30 minutes, okay, so I want to form a strategy around it. And that's where like so significantly what I have observed is like, okay, the day's trend, you would be able to predict, okay, in the first 15 to 30 minutes. Or if you are actually following up, okay, something like an SGX Nifty. So SGX Nifty would tell you like, okay, how the market would typically is going to start, okay, the Indian market is going to start. So some of these factors you could consider, and then the first 15-20 minutes you would see a movement, and that's when like your options, okay, kind of move a little bit up and down. And I just keep my strategy as 15 to 30 minute strategy, because basically I look for the trend in the first 15 to 30 minutes, and then like let's say like there is a 10% movement or like a 15% movement, I just exit. Okay, so that's something like if you guys are interested around knowing some of the strategies I personally follow or my group follows, okay, I would be able to have you like kind of like okay have one-to-one sessions or get in touch with you to give some explanation around that. And any questions? Any questions?
No, I'm happy to see that the options market has not changed much from what Arvind that you told. Sorry, Anand that you told. So it's like I used to do options about 10 years back. It's pretty much the same.
Yes, this one thing I love about the Indian options market is like okay, there is a lot of volatility to some extent. Okay, maybe it's operators driven or like there are so many reasons. Okay, but and again, I'm not into futures or something like that where you would like maybe you need significant amount, but something like okay, buying an option, okay, it's reasonably at a 5,000 or 10,000 rupees, you will be able to buy an option and you would be able to like get a 15-20%, okay, on an intraday, and you would be able to exit. So I love this options trading, and as I said, there were lots of ups and downs, right? I had a lot of in between, I had a lot of breaks, but the more and more you get experience to it, and that's when you would be able to crack out and then come out with a strategy. So, so if you are kind of like interested in trading, I would recommend definitely like, okay, a bit of options trading. And again, right, I'll come back to the lessons and broken myths based on my experience. So we will talk about a bit about the options on that. So my lessons and broken myths. So we always say like just invest and stay put. Okay, that's a myth. So when I say like just invest and stay put, we always say people like, hey, let's invest in the stock market, like okay, in some blue stocks, okay, and like maybe we'll just wait for another 15-20 years. Okay, that's going to rise up like let's say like okay, maybe twice or thrice, but that's not the case actually. So there are several blue chip examples, okay, where it has gone worse actually. So that's where, right, kind of like even though you are doing a kind of a passive investing, which means you are investing and then you're not just kind of like following up. You want to just look at, you should definitely look into something like a portfolio rebalancing once in every time. And I would say like a portfolio rebalancing the simple way, right? Okay. A lot of us know like, okay, the fundamentals of stock trading. Okay. But okay, rather than like getting into too many technical aspects or technical indicators, one of the simplest way I would say like you should rebalance your portfolio is according to the indices. All right. So you would have seen like indices, there used to be okay situations where okay, I think 5 years or 10 years down the line, okay, the individual mutual fund managers are like okay, maybe like as an individual investor, they used to outperform the indices. Okay, but now, right, okay, you would see like okay, a Sensex or a Nifty, okay, or a Nasdaq, okay, kind of growing at like a 20-30%, but you would still see like your portfolio is lagging at like a 10-15%. Okay, so one of the simplest balance, if they think like okay, some particular sector is not performing well, they want to show up the indices. So indices is something like a pride of every country, like okay, being an investor in the stock market, I think like okay, indices is the pride of a country from an investor perspective. Okay, so they will typically like do this sectorial changes, or they'll bring in some stock, okay, they will just take out some stock. If you follow that, you would be able to gain some basic knowledge around like okay, the portfolio rebalancing. So just invest and stay put is a myth. So which I think personally you shouldn't be following. You should often rebalance your portfolio, having a longer term objective of a 15, 20 years. And then this is another lesson. So more risk, invest small, less risk, invest more. So this looks like a traditional lesson. So like that's where like okay, something like a crypto, okay, so or maybe like a something like a commodity. So I mean I'm not into commodity trading, but something like a crypto, right? Okay, so you should not like okay go bang about it and invest a lot of money. Like okay, you should probably start with like okay maybe a 5% or 10% or maybe a 2% of your portfolio. Okay, so anything that has more risk, try to that has a lesser risk, let's say like a bond which it will yield you like a 12% or an NBFC or standard NBFC that will yield you a 12% interest. Okay, you should start probably like investing a bit more like or some kind of standard blue chip stocks. Okay, so that's the lesson. And then averaging is good. So this is kind of like another lesson that I have learned. So people generally say like okay, the more and more stock market gets down, let's say like I buy a stock like let's say for 200 rupees or let's say like $100. Again, it's a good blue chip stock, okay, and we see like okay there is a significant decrease like a 50%. Okay, so what generally people do like okay with our traditional mindset, okay, we will actually average the stock. So let's say like I bought 100 quantity for 100 rupees. Let's say it goes for 50 rupees. Let's say like I buy another 100 quantity, then my average comes to 75. Okay, so that way we think that okay, that's a good strategy. But okay, so I think like personally, like if you have a particular stock which is like kind of like 30% below your lifetime high, okay, so you should try to avoid averaging. So the averaging is something that will not work out always. So and then like operators drive some stocks in the market. Yes, definitely, like to some extent, and there are some specific scripts. Okay, a long time back, right? Okay, when I started with the Indian stock markets. Okay, so I'm sure that like okay, a lot of people who were trading around like around 2007, 8. Okay, there was this big gung fu about this Reliance Power. Okay, so Reliance Power, right? Kind of like I think they started with their IPO price of like okay, let's say like okay, 350 or 400. I think somewhere around that. People like kind of like so crazy, and they started like okay, putting into the Reliance Power IPO without some kind of production or anything. Okay, so and these are some of the and I'm sure that this one thing that I have always observed is okay. Maybe now he's no more into a lot of business. The Anil Ambani group of stocks. Okay, so typically what I've seen is there are a lot of operators related trading. Okay, so that's something you have to be cautious about. I've come across situations where I just follow up the earnings, the quarterly earnings of the company, and typically you see that like okay, the earnings were really good. They were able to make okay a significant jump from their previous quarter, or like let's say like okay, their guidance is good, or they were able to sell okay lots of cars and trucks in the case of an auto industry. But still, right, you would see like okay, the stock being pulled. Okay, so as a trader, you have to be cautious about it. Okay, so there are certain stocks that are driven by operators, so they do the movements of the stocks. And from I used to kind of like okay trade on Indian equities, okay, and US equity and derivatives and crypto and kind of stuff. So personally, like what I felt is from my understanding, like okay, so if you're a long-term investor, US equity, if you have an option to invest in US and Indian markets, I would say like US equity, okay, is far better than Indian equity. And when it comes to derivatives, okay, I would say like okay, the Indian derivatives is far better, like because of the volatility and the minimal amount that you need to invest. And the IPOs are not anymore the best. So there used to be days, right, where the IPOs, okay, they are at a very low price, and then like within 10-15 years, right, okay, so that grew up like okay, like let's say like 20-30%. Okay, so now by IPOs itself are overpriced. So this is something like okay, we always have them. It's something like an IPO. You invest it, like okay, you will be able to make lots of money. but that's not the case anymore, at least. Okay, maybe they would just give you a premium of 50-30% on the first day. So just to let you know, IPOs are nothing but the first time a particular stock comes to the stock market, the initial public offering. So they are not anymore the best, but it used to be best. Okay, so one of my friend's dad, like, okay, so he invested in something like a KMCH, which is not, okay, something, okay, that we are like, okay, so much familiar, the Kovai Medical Hospital. So I think like it was like 20 rupees or something like that. Now I think it's probably like 500-400 rupees, or maybe I think it reached like 600-700 rupees. Okay, so there were good old days where like IPOs, even if it's an, okay, not too much of a familiar brand, okay, that used to yield you lots and lots of money. Okay, so I said like KMCH is one thing that based out of Coimbatore, like, okay, so it grew like 20-30 times. Okay, but the scenario is not like that anymore. So IPOs are not, okay, anymore the best, but significantly they would give you like, okay, 20-30% premium. And then if you are an investor, as I said, like if you have a long-term objective, let's say like you have a 15-20 years, okay, investment horizon, so time horizon, so then you don't get driven by short-term news. Okay, so don't do any kind of panic selling or something like that. Okay, it's just you have to be a passive investor at times. And then let's say like if you are, okay, someone who is interested in stock market, I would say like, okay, as a starter, okay, so what I would, there are a lot of websites actually, like in terms of Indian stock market, right? So obviously like one thing that I watch out is Money Control and Economic Times and stuff. Okay, so typically like how, from a trader perspective, right? Let's say like, okay, the earnings season is one of the perfect timing to do the trading actually. So typically like what you could do is you pick some stocks, okay, look for the earnings, okay, let's say like there's a quarterly earning, okay, so there would be always estimates by different analysts. Okay, so and let's say like, okay, typically like if these guidance or the estimates that have been not met, or if the NPAs increase, okay, so or let's say like the automobile sales for the last few months has been bad, like, okay, you would just get some, okay, idea around like, okay, how the stock is going to perform. So it's not about like, okay, you just go by some analyst reviews or recommendations. You could just do a lot of self-analysis by yourself. There are wonderful websites like, okay, Money Control. Typically like, okay, you would be able to like, okay, compare, okay, whatever the estimates with whatever the actual. Or you could just go to, on the particular day of the result announcement, you could go to BSE announcements, you would be able to follow up. So these are some of the things that I would suggest for someone who is actually, okay, getting started with the stock market. Okay, so you have to like always watch your earnings, policy changes, and future trends. And one thing that I have understood as a lesson, okay, so if you are a long-term investor, let's say like a 15 or 20 years or maybe 5 years, okay, so definitely there is always an option to recover your loss if you're an investor, and if you do a proper portfolio rebalancing. Okay, and if you pick the smart stocks, okay, you would be able to recover your loss. Let's say you are down by 20-30%. COVID is a simple scenario. Okay, so let's say like your portfolio is bleeding 20-30% with all solid stocks, right? Bit of rebalancing, right? Maybe like 2 years down the line, you would be able to recover it. So as an investor, that's the difference between a long-term investor, okay, and a kind of a trader or short-term investor. So if you are a long-term investor, there is always options for you to recover. So you need not worry when your portfolio gets bleeded. So that's some of my lessons and broken myths. So any questions, or someone wants to bring any perspective around that?
Yeah, again, this is Toya. I really wanted to say thank you. A lot of when you touched. So one of the thing, I wanted to clarify with you, since you have the very good success on the trading market, especially in India. So wanted to understand, for option, it is really required to have the direction play. How you determine or anticipate the the price movement, which direction you wanted to pick it. let's say, you are anticipating some up movement or, down movement, to call for the put or, whatever. Wanted to understand how do you, identify your, the direction play.
Okay, so with respect to options market, as I said, like I have changed my strategy over the years. So I used to kind of like okay buy a specific uh stock option, and I would wait okay kind of like for weeks. Okay, let's say like it has got a monthly expiry, right? I used to wait for like weeks, okay, to see like okay if it turns around. Let's say like I was waiting for like okay like a 50% or 100% profit. Okay, but that's when I realized that, okay, maybe like according to me, that's not a smart move. So I always look for, okay, a 10 to 15 percentage movement. Okay. But the investment, like maybe like you have to do a reasonable, investment. Okay. So what I'm saying is like you have to first look into the stocks over a period of time that has like, okay, on a particular day, like let's say like it has a 3 to 5 percentage movement. Okay, so let's say like take an example of an ICICI bank. Okay, so my strategy is like let's say like the ICICI bank like on a particular day it moves from like let's say like 360 to let's say like 375 rupees, which is a normal movement. Okay, so kind of like okay within that 1 to 5 percentage movement, it's a normal movement. So what I would do is like, okay, that's where I said like this 15-minute strategies would help. Like if you follow it very closely, let's say your market starts around like let's say like okay 9:15. So you would 9:30. So you would typically like okay watch for that 15-30 minutes to see like how the trend works. Okay, so let's say like there is a 10 percentage I always write. Okay, so I remember the US timings. So the market starts at 11:45 p.m. EST. Okay, so what I do is like the first 15 minutes I watch for the movements. Okay, so that will just give you a trend on early trends of how the stock is going to behave during the day, unless you have okay some kind of like okay really bad news or good news, right? Okay, that's going to like okay retain the 15 weeks 15 minutes or 30 minutes trend, that's going to be retained. So typically I wait for the first 15 minutes and I'll see like how the stock movement is done. And most of the trades, right, if you look at this, I've just done up to 15 trades in this sample, right? I was able to make like profits in 12 of the trades. So what I do is I just most of the cases I just buy it at like 12 a.m. EST, like around 15 minutes of the market. I will know like that's probably like, okay, that's when you will have a high or a low point on a particular day without significant news. And I just buy a put or a call on that particular time. And what I actually do is, let's say like, okay, I buy an Ashok Leyland. Okay, so I'm just giving you some examples based on what I have done in the last few months. Okay, so let's say like Ashok Leyland, it's typically like, okay, you have 9,000 per lot, right? So typically like you buy it for like, let's say like 2 rupees. Okay, and you spend like let's say like for a certain strike price, let's say you buy it for 2 rupees and it gives you like let's say like 9,000 lot, you will invest like 18,000. Okay, so let's say like okay on a particular day, let's say like this particular Ashok Leyland stock moves like 3 to 5 percentage, right? The options that you bought, okay, be it a call or a put, right, that moves from let's say like 2 to 225. Okay, so the moment it moves to 2 to 225, right, like let's say like okay you have investor like let's say 2 lots, which is 18,000. Okay, the 25 paise difference, okay, would you drive you like a 4,500 profit. So what I'm saying is I'm not looking for the big moves. Okay, what I'm just looking for is the small moves. So typically you have to pick certain stocks that has uh, some 3 to 5 percentage movements, and I do not wait for a particular option to kind of like move from 2 to 4 rupees or 2 to 3 rupees. Okay, so as long as it moves like okay 0.25 paise, which is like okay for a 2 rupees investment, 25 percentage is probably like 1 by 12.5 percentage movement. So 12.5 percentage movement, which is significantly more for me to make happy on that day, right? So I just exit. So, and I look for open interest, I look for news, and I just compare the earnings. And typically, right, when you have an earnings that's going to be released, there is going to be some volatility in that stock. Okay, definitely it will move up and down. So you, even if you put a call or a put, right? Okay, so you will be able to make the 10 to 15 percentage, and that's the strategy I have learned over the years. You need not go something big, as I said, right, like a 40, 50, 100 percentage. Okay, so that's my strategy. I'm not sure, like, Suri, if that answered your question, so at least I'm just explaining you my strategy.
Yeah, but you might be the really genius, to find out within 15 minutes. So I'm into the market for almost 20 years, and I'm a long-term investor. Trading is, still I'm a kind of a kid, and the playing around, having the
Absolutely, I
what we
can't
call it, the
deny that. Like,
difficulties.
okay, so trading, I would say, like, okay, 95 percentage, 95 percentage, or maybe like I would say like 99 percentage of them, okay, fail as a trader. And again, like as I said, right, I had huge losses at some point of time. But and again, like, okay, maybe this strategy is something that I've been like, okay, following for the last 3 or 4 months. Maybe I have to change my strategy in the future. Okay, so yes. So trading is such a dangerous game, and that's where, right? And this is something that I've learned over the years. The greediness shouldn't be overtaking you. Okay, and that's all comes by experience. Okay, yes. So that's where, right? The better way to start is always as an investor. So, and once you get familiarized with a lot of this new stuff, then you could start doing the trading actually. So, we'll discuss definitely if some of you guys are interested, we will discuss offline. I can share my perspectives, and then like we will see like okay if it can help you. So I'll take pause, like any other questions, any other perspectives, or anything that you guys want to bring in, any participants.
Yeah, Anand, I had one question in mind. See, when you go for call options, if something equity is something having around 52 rupees value, and what call option you look for, the strike value of the call option?
So I would typically look for, okay, and depending on the news actually, right? Okay. I would say like maybe something around 55. So one of the things I would suggest is, let's say like, okay, the stock is trading at 52. Okay. The spot price is 52, right? Okay, you should prefer to take an option, okay, which is like either 50 rupees or 55 rupees. Don't go for something like a 50 to 50 or a 53 or a 54. The reason being is people always like to, okay, kind of put more money on something really like, okay, close to a rounded figure actually. Okay, so that's where like your open interest, okay, would come into picture. So to answer your question, so well, let's say like the stock trades at 52. Okay, I don't go for 60 or like a 58 or 57. I would prefer something like a rounded figure close to 50 or a 55. And it also depends upon the timing. Okay, let's say like, okay, you are at the beginning of that month. Okay, and you are putting an options contract, obviously, right? Let's say like you put a 55, it's going to be very expensive. Maybe like that time, the beginning of the month is also a factor that needs to be considered. Okay, so if you're at the beginning of the month, maybe like, okay, you could just deviate like maybe like, okay, a 5 percentage from your spot price. Okay, or like maybe a 10 percentage from your spot price. Okay, but if you are moving towards the middle or end of your month, okay, I would say like, okay, stick closer to your spot price. So those are the strike prices where you will have like, okay, more of contracts traded and you will have movements. So one is the rounded figure. Okay, so you should always look for a rounded figure. Even in terms of Nifty, right? Okay, so I always say like, let's say like you put a call option or a put option. Don't put something like for something like a 11,650 or 11,000 700 or something like that. Like let's say it's 11,600, right? I would say like 11,500 is going to have more of transactions or more of playing. Okay, so you should look for a rounded figure. And the second thing is you have to time that. Okay, so basically, like if you are at the beginning of the month, you could just have like, okay, something beyond like 5% difference. But the more and more you inch close towards your month end, like, okay, you should be around the spot price. Okay, and I just want to give a real-time example of what happened to me like 2 days back. Okay, so for this market expiry, right? I I had this 160 DLF call options. Okay, so it was like I just had these options like around. I think I bought it for around like 3 rupees or something like that. I just bought it. Okay, so 160 call option, so DLF. So what happened is I think I just started on Monday, and like Wednesday, like I just gave up. Like, okay, I was like, it was around 270 or 250. So that was like, okay, I had some like 3 or 4 lots. So there was a 50 paise loss. So I just exited. And what happened is like on the expiry day, okay, so the DLF it moved 15 rupees. Okay, so it's like, okay, so and again, right? Okay, so you have to time it. Okay, and it also depends upon your risk appetite. Let's say like, okay, you are willing to lose some amount of money like for a hefty profit, you could just stay. Okay, but you don't want to lose your capital, maybe like a 5% or 10% loss you would be able to manage, then you exit. So there are quite a few bit techniques and experience around this. So I hope that answered your question. So uh,
Thank you.
and I'm moving on to, I'm not sure what's the time, so I think it's been like probably like 1 hour. Okay, so I want to give a bit thought around these emerging trends, and that's where, right, I said like, okay, the software is eating the world. Technology is something that's kind of like, okay, kind of like taking over, like all this ML, artificial intelligence kind of stuff. This is taking over the world. Okay, and be it any problem. So the reason why I specifically like this quote is, be it any problem. Okay, I've heard someone saying that you could convert it into a software problem. Okay, so be it like, okay, to tell you like, okay, there are a lot of examples. Okay, so even the elections have been won, okay, and lost, okay, based on the data and like, okay, all these, okay, things around the software and industry. Okay, so I'm sure that like you guys would have watched some of this Netflix series around like, okay, how Trump made it in 2016 using this Cambridge Analytica. So those are some of the things, okay, that would inspire you like, okay, how the software or the data is taking you to the next level. And to tell in a funny note, right? Okay, so I would say like, okay, let's say you have something, okay, some kind of like, okay, fight between your wife and you, right? Okay, I would say like software would solve the problem. Maybe you have to just list out the scenarios, okay, or the situations where you end up like kind of like, okay, getting into a fight or getting into a conversation, heated conversation. You put those scenarios, that's your data. Okay, next time you face the situation, you know how to handle it. So that's what I say. Software is something like, okay, that's eating the world. You could solve any kind of problems as long as you convert a problem to a software problem. Okay, so that's with that perspective, I'm just okay moving on to my next slide. Okay, so so the two trends that I want to specifically discuss is about the digital banks and the peer-to-peer lending. Okay, so digital banking, okay, is a new concept, okay, completely different from traditional banking, okay, where you need not physically have a branch, okay, but still you would be able to do all kind of your account activities, services, money deposits, withdrawals, or let's say you want to apply for a financial product, you want to invest in a financial product, or you want to do a loan management, you want to apply for an automobile loan, or like a home loan, like, okay, so this digital banking trend is going to remain. Okay, so and people generally ask like, okay, what is the difference between the online banking and digital banking? See, online banking is probably like, okay, a starter in the case of digital banking. So I would say like we used to have these good old days where you used to have like, okay, all the public sector banks, then the private banks came into picture. Slowly, like you have the online banking. So the trends have changed. So digital banking to me is probably going to be the next trend. Okay, and I think like anyone would love to have a bank without a physical branch, because that kind of reduces a lot of um, operating costs. And let's say like you want to do a new customer acquisition, you need not physically have some person doing all those, okay, services for him sitting in a branch. Okay, so this is something trend that's going to be kind of like okay, pick up. And I would say like COVID-19 is probably like okay, before COVID-19 maybe it was kind of a desire like okay, a lot of banks want to get into digital. Okay, but now it's more of a demand actually. So if you can do any bank transactions without a physical branch, okay, so I think people will do it. And again, always this question, what about like, okay, there are a certain group of population, okay, who do not have access to, at least in an Indian environment, who do not have access to a phone or like, okay, net banking kind of stuff. Things will change, okay, as generations grow. Okay, so at some point of time, like the digital banking is going to be a trend and it's going to be like, I would say like, okay, that's going to be a norm. And I want to quote some um, digital banks, okay, that are kind of like okay in the US market and what's being done in the Indian market. So, and before that, like before I put up those screens, I want to just talk about this peer-to-peer lending. So, in simple terms, peer-to-peer lending, let's say you want to buy a loan. Okay, so the options that you have is you go to a financial institution, or let's say like okay, you go to a proper lender or an NBFC, and then you just do this get your loan. But peer-to-peer lending is nothing but a new concept where a group of an individuals or an individual who is willing to loan you a money, give you a money, they find the right set of people, okay, and then they just do it via on the online peer-to-peer lending. So so this has become like okay so much of interest, at least in an country like US, because you have a standard way to assess a customer's credit. So you have the credit score. Okay, so there are some good things about this peer-to-peer lending in the US market. Let's say like okay, you have an significantly lower credit score, at least in the US market. Um, US market, still you will be able to okay get okay your get your money financed with a peer-to-peer lending platform or a peer-to-peer lender. Okay, so even with a low credit score. Okay, but the interest rates are going to be high. So this is going to be another trend. And with so much of, and we all know like, okay, there is so much of unorganized buying and giving within India. Okay, so people give for interest and kind of stuff. Okay, and slowly like, okay, this is going to be another trend. But there is a major problem with respect to like, the peer-to-peer lending platform in India. So typically, like we do not have something solid like a credit score that we have in US. I think there was something like okay, but still, right? Okay, it depends on the not all the borrowers will have. I just forgot that like what kind of score that we have in India. I just missed it. But so that's the difference actually. So you have a proper credit score and a credit tracking mechanism in countries like US. So that's why peer-to-peer lending is getting popular. Okay, and with respect to digital banks, okay, here like I've just provided a link. Okay, so about the top 10 digital banks. So here are some of the digital banks. Okay, so Monzo, Chime, Revolt, Starling Bank, Tangerine, N26. So these are the digital banking that were across the globes, especially in UK and US. So that's going to be definitely a trend. And then digital banking in India. So I think the difference is there are like, okay, individual players in the US market. So they're not related to any financial institutions in terms of digital banking. But in terms of India, right, I think they are, okay, mostly linked to the private banks. And this is one of the reasons I specifically said the public sector banks, okay, which are still, okay, running in the brick and mortar model, or like where you need a physical presence, okay, they are all going to be like okay wiped out at some point of time. Like okay, they are not going to be like okay growing as much as a private banks which is actually investing in okay this kind of digital banking. So that's the snapshot of some kind of digital banking that's happening in India. So peer-to-peer lending, and again, like I've just given some insights of some of the companies within US, Perform, Funding Circle, Prosper, and Farsight and Fincy. So any questions around digital banking or peer-to-peer lending? Okay, so I'm just moving on to
Anand,
yep.
Anand, this is Turi again. Yeah, so it's a new concept. So good to know that it's a P2P. So what is the risk associated with that? Is the normal person can finance? For example, if I have money, something around $20,000. So how this is possible? Is there the platform, or how the risk is evolving around that? Could you please explain to me on that, the P2P, from the layman perspective?
Okay, so
So if I'm going to sponsor it.
yeah, you are talking in terms of more of a giver, but I have experienced it as a borrower. Yes, so when you say in terms of risk, and again, okay, so it depends on your credit score actually. So you would have some kind of access to the person whom you're actually going to access to the profile of the person whom you're going to lend. Okay, so I think it's, as far as I know, like, okay, so it's purely your call. Okay, so to decide, okay, whether you want to lend based on the borrower's profile actually. So, and one thing I have seen is, okay, this peer-to-peer lending stuff works well for someone like a salaried employee. So if you ask me, right, okay, so what is the terms, okay, that I would probably like, okay, do a peer-to-peer lending for a 20K USD. Okay, the first thing is you should look for the profile of the person whom you're going to lend. Okay, and the second thing I would say, like, okay, you would probably have access to his profile, like, let's say, like a salaried employee or someone. Like, okay, typically, like, okay, I would say, like, the risk level is low if it's a salaried employee, because, like, maybe like he'll be able to pay the uh, pay the monthly installments, or like, let's say, like, okay, whatever kind of like financial agreement that you have, you would be able to pay. And again, like, if you have a reasonable interest rates, I've seen, like, okay, something like a Prosper or Upstart, they say, like, okay, 30%, 25%. Okay, so there are banks which are giving at like 10, 12%. Okay, but and it also depends on the interest rates. So let's say, like, you have significantly lower interest rates. Let's say, like, okay, you are able to give it like 15 to 20%. Okay, so you would be able to find some customers. And the first thing is, like, okay, the credit worthiness of the person and how he is actually going to pay, whether he is a salaried employee. So that's another aspect. Okay, and these are some of the criteria that you will determine, okay, to do the peer-to-peer lending. And we will definitely talk about it offline. So obviously, if you have funds of 20K and if you want to do a peer-to-peer lending, we would be able to work out, like, and again, like, this is something that I've been exploring. So, but I have heard, like, at least in India, there are individual peer-to-peer lenders. Okay, I'm not talking about the unorganized sector. Okay, but there are individual peer-to-peer lenders. You could just explore a bit. Maybe you want to convert your money to INR, and there are peer-to-peer options that are available in India. So, uh, any more questions? Okay, so that being said, I'm just going to move on to the last topic before I finish. And again, like, technically, like, okay, so the blockchain technology and cryptocurrency. Okay, so I'm not too much into the technicalities of it, but as an investor, this is something like I like the cryptocurrency as a stuff, at least like for 3 to 5% investment. So I just want to bring some basic concepts around the blockchain. Okay, so typically, like, okay, when you do a transaction, let's say I transfer an amount from my Bank of America account to, let's say, like, okay, maybe like an ICICI bank account in India. Okay, so typically, like, okay, the kind of transaction, like, okay, the posting, it just happens between, okay, two different institutions. So typically, like, your transaction, the debit or the credit is recorded, okay, between these two entities. Let's say, like, one of the entities, they have a failure or something like that, right? Let's say, like, okay, there was something around like a hacking or something like that, right? Okay, so it's kind of insecure. That's where your digital ledger or distributed ledger will come into picture. So the blockchain technology helps to record your transactions in different computer networks around the world. So basically, like, okay, it's not okay centralized stuff. It's too much decentralized. So typically, like when you do a transaction in a cryptocurrency, okay, it uses the blockchain technology. So which means you have a distributed ledger. Okay, and this is something like a new digital asset class. Okay, and the way these transactions are recorded is it's like a block, and you would have an hash function attached to it, and typically like when another transaction attached, another block attached to it. So typically like okay, it is something like a decentralized, okay, distributed database. Okay, so that's completely different from the normal one-to-one transaction that you do. So this is the technology that is adapted by the cryptocurrencies, and then even in cryptocurrencies you have the generation 1, generation 2, and generation 3 cryptocurrencies. So Bitcoin, okay, so um, Bitcoin is one of them, like, okay, kind of, that was a starter, that was the first digital currency. That was, I think, back in 2008. I think there was, I mean, still there are a lot of unknowns. I think Satoshi Nakamoto, someone like that person, like, or maybe people are not aware, like maybe it's a group of individuals or something. He kicked off this digital stuff, but it's growing, and I'm sure that it will grow leaps and bounds, and that's why a lot of central banks or country central banks by themselves, okay, they have started investing in this digital currency. There were some significant improvements around that. So, but okay, and again, I'm not familiar too much on the technical aspects of it, how it works and kind of stuff. But from an investment perspective, definitely is something that you have to um, um, experience. Okay, so I would say like with smaller amount, and there are multiple ways to do it. Okay, and especially if you are in US, like okay, you have lots and lots of this crypto exchanges where you could just go and do the trading. Okay, maybe you could just buy point not for Bitcoin or something like that. So I would say like okay, as an investor in your portfolio, you should have some kind of cryptocurrency. And there are crypto exchanges like Coinbase, Binance, and stuff. And I think even in India, I think like there was a recent regulation. I think you can start investing. I think there was some ban, but right now I think you could start investing it. So I would say like as an investor, you should definitely start looking towards this cryptocurrency. And that's it pretty much I have for today's session. But if you are interested to hear more about okay, the stock trading or options trading or anything like with respect to okay, the financial management, I'm going to probably share this presentation or send this Google Docs. So if you are willing to stay connected and get some thoughts around our investments, so you could just put your name and details in this. So this is something I'm going to ping in the chat window. So that's all. And any specific queries or questions, guys, or you want to talk on any specific topics?
Anand, today again, I again wanted to thank a lot of information you have given to us. It's amazing, the platform. It's good to know that. The one thing, I wanted to, understand. As a long-term investor, so I see, the market, it's a disconnect at this moment of time. So I'm not sure this is the right time to invest. I always agree with your point of view. Investment, the time doesn't matter. It's always is the right time. But do you suggest or recommend,
I would say like,
this is the
okay,
right time?
I would say like, and as I said, right, okay, it depends on the time horizon, but I would say like, okay, maybe like we want to wait for the elections. I very much understand your point of view that the markets are at lifetime high, okay, especially like, okay, something like a NASDAQ. So, and again, right, okay, at this point of time, maybe like if you're a short-term investor, maybe 2 or 3 years line, you would be able to make make a 10 to 12 or 10 to 15 percentage, okay, on year. Okay, but if you ask me personally, Yeah, maybe you could just start like, okay, and I'm sure that you would have already been invested, but if you could ask me, let's say like I have 100K and I want to invest, okay, is this the right time? I would probably start playing with like maybe like a 15, 20K. Okay, and then like, okay, I would wait for the elections outcome. Okay, and how this, I'm sure that this COVID is not going to impact too much on the stock markets. Okay, so one fine day, right, we are all are going to come out of it. Okay, but something like an US elections or something like that would bring volatility. So if you have 100K, maybe you could start investing some 10, 15K or a 15 percentage, and then wait for how the elections would get over and see like if there are any other significant changes. Okay, and based on that, you could just start, okay, putting money like gradually. So that's my understanding, not like, okay, kind of like 50 percentage or 60 percentage in one shot. Okay, start with the 10 or 15 percentage and then you gradually like wait for the outcome of the elections and other things that's going to happen. But one thing we are all sure that like, okay, even this COVID situation gets better. Okay, there is going to be like, okay, the interest rates are low, which means there is going to be a lot of liquidity in the market. Okay, so which means the stock markets would be driven. Okay, to me, right? Okay, the stock markets, at least it's not going to fall too much. Okay, at least till the elections are over. So it's going to be there because our Trump will hold it actually. So there are, so that will be kind of in that 5 to 10 percentage range, or maybe like, okay, 3 to 5 percentage range. So that's my answer. So invest small and then like wait for the trend and then you could just start putting more money. That's my suggestion. So any other questions?
Yeah, Anand.
Yes, Thomas.
Regarding going long on equity and buy a put for the safer side, will it work it out?
Uh, that's again right to see long on equity, and it depends on like, okay, what kind of put you want to buy. You want to buy specific. So there are two things. Okay, so when you do a trading, okay, don't tie that to your long term portfolio. Okay, so let's say you have a long term portfolio in equity. Okay, so you just do that investment separately. Okay, but if you want to buy some puts or calls, right? You just probably like, okay, do it separately. Don't tie that to your, when I say tie that to your portfolio, let's say like you have a particular stock in your portfolio. So what I'm asking you to do is not kind of hedging. Okay, so let's say you have a stock, okay, and you think that like, okay, you have like a 30, 40 percentage, or maybe like, okay, you shouldn't be having a specific task like stock 30 or 40 percentage of your portfolio. But let's say like you have a particular stock like 15 percentage in your portfolio, you have invested huge amount, right? Okay, maybe, okay, when the markets, you think that you smell that, okay, that okay, the markets are going to be volatile, the stock that I hold like 15 or 20 percentage in my portfolio is going to have some movements. That's when you would probably like buy put in that particular stock. Okay, and what I quoted as an example, right? Okay, in general, okay, if you have like more money and if you're looking to lose like, okay, significant amount of money on every month, anticipating for a volatility, huge volatility at some point of time, you could invest maybe a 5,000 or 10,000 rupees on put options. Okay, so it shouldn't be tied to your portfolio unless and until you hold a significant percentage of your stock. So that's where I said like, okay, when it comes to options trading, I mean when it comes to options, it's purely trading. So
Okay, thank you, Anand. Thank you for the tips.
uh, I think I'm done. Like, okay, and Suri, special thanks for you just for bringing some context and getting into some discussion. And I hope like this session was useful to a lot of you. Like, and as I said, like, okay, if you guys want to stay connected, like, okay, you could just always put your contact out there in this Google Docs. I'm just going to copy that and I'm going to put that in the chat window. Thank you, guys. Thanks, Thomas.
Thomas, sir,
Thanks.
Yeah.
can I go for the closing remarks?
Yes, please. I mean, sorry, sir. Thomas, you have to decide. Sorry.
No, if audience, if you have no other questions, so shall we go for the closing remarks? I think Vasanth.
Yes, Thomas. Yes, Thomas.
Yeah, I request Sudhakar, the Vice President of SREC Alumni Association and 2005 mechanical batch passed out, to give a closing remarks. Thank you.
Thank you, sir. Thanks for your presentation on finance management during COVID times. So we are proud to host Mr. Anand Subramani, Lead Product Consultant, CTS USA, who belonged to 2001-2005 batch EEE, for accepting our invitation and being with us during this occasion and sharing his experience on trading. So on behalf of SREC Alumni Association and Mr.N.R.Alamelu Charitable Trust, we thank once again to all the participants for sparing their valuable time during this online webinar series. So we expect your support in the upcoming webinar series also. Thank you. Have a nice day. Thank you, Anand, for your wonderful presentation.
Thanks, Sudhakar. It's always a pleasure to be part of such an active alumni team. Like, looking forward to work with you guys.
We'll meet you soon.
Thanks.
Thank you, Anand. Thank you.
Sir. Thank you, Anand.
You can close the meeting. Yeah, thank you.